Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is June 10th, and we have Brent crude oil rising again slightly this morning in Asian trade, up about 0.25% at 67.23, and WTI a little bit further back at about $2. We have a steady recovery of oil prices since May 5th in the last month or so, where we tipped below $60 on Brent, and now we're up to 67, nearly 67.50. We're nearly closer to $70 a barrel now than $60. We are closer to 70 than 60. We're now nearly closer to 70 than 65. So there's clearly an upward momentum in the oil price. Narendra Taneja, India's leading energy expert. Narendra, in a week in which we have the Chinese and the Americans meeting in London, we have everybody boarding a plane to fly to Canada for the G7 summit. What are your thoughts on these events, and which has the sort of the biggest outlook and impact for the oil markets?
Well, good question. I think the optics are interesting and sound positive, but I think we have to go beyond optic. And I really don't think there is any fundamental change in terms of economic relationships or economic tension between the United States and China. I think picture is more or less the same. The US is going to stick to the way they have been since President Trump moved into the White House, and China is working on a long-term agenda. They want to be number one power on the planet, number one economic power, political power, military power, and so on and so forth. But they are very good at playing these games. China is a great chess player, and I think they know how to outsmart President Trump if they need to, and this is precisely what they are doing. G7 again, I mean, according to me, is a misnomer. Indian Prime Minister is going there, and will be there on the high level. But at the same time, G7 means the large economy of the world, but India is the fourth.
Just take one point, sorry, on the Indian Prime Minister going. I mean, relations with Canada in particular haven't been great between India and China. Is this any indicator of them moving now in a more positive direction?
Well, there was stress in relations between India and Prime Minister Trudeau, not with Canada.
Okay.
Now that there is a new leadership, and the leadership is taking a completely different view, there never been any major problem between the two countries. It has been with the then leadership of Prime Minister Trudeau. And I think that now that he's out of the Prime Minister office, things have begun to fall, kind of to where they should be, because Canada is a very important country, important business partner for India. There are millions of Indians living there and all that, and contributing to Canada's economy and political life too. So I think no. But coming to G7, I mean, G7 basically means the 7 largest economy of the world. But India is the 4th largest economy on the planet, and they are not part of the G7. So, I mean, the whole construct of G7 basically is G7 the West, or G7 the OECD. I mean, should we take it that seriously? People like me, we don't. Yes, but it's good to be there, and a prime minister will be there in times like these when there is so much of massive economic and geopolitical turbulence. It's important that India is there participating in all important events, including G7.
Let's welcome to the table Maliha Bengali, founder of MB Commodity Corner in the UK today. Maliha, your thoughts on where the macro picture is right now? I mean, it seems that the oil markets this week and the last week have got a lift from the idea that the US and the Chinese are talking again. Why does that matter ultimately as the market? I thought it had priced in that the worst was over, but your thoughts on the intersection between the positive mood music out of London and the oil price rising?
Thank you, Sean. I think the big change in sentiment over the last 2 months has been on the US and global economy regarding recession. if you can remember, the odds of a recession were close to 85% back in April, just before like Liberation Day. And today they're less than 20%. So the market's become a lot more sanguine about the demand and global economy. Now, whether it's the US trade talks going well, we keep seeing snippets of trade talks going well, but we haven't seen details. The devil will be in the details. But I think it's the overall perspective of a lower dollar, healthy economy, tariffs not being as punitive as initially thought, and that's taking oil prices higher right now. If you look at the actual fundamental demand side, nothing has really changed. It's more the perception rather than anything else. And I think that's what's happening. I mean, we've seen that happen to a lot of other commodities as well. That's really what's changed right now.
And speaking of that sort of position, the Chinese, I mean, you talk about the health of the US economy and so forth being continuing to be better than expected, or at least the idea of recession and the cataclysmic trade wars off the immediate expectation. But where is China at? Where's China's sort of economic performance this year as a major pillar for the energy markets?
Well, China's data is coming out a lot more deflationary. The first 2 months showed really good data because there was a lot of front running of the tariffs and the import orders were good. But the latest PPI and CPI data has shown another deflationary trend. So China's optics have not changed. There's a systemic problem in terms of how they're going to boost domestic consumption. And if you look at Chinese oil inventories, they're very smart about buying low and selling high and using their storage. So we don't really see a change in demand. I mean, there's a secular change in demand for the last few years. So whether this sort of translates into higher oil price, we don't think so. But right now it's more of a perception. But no, China is not picking up in any way. It's still going through a massive secular deflation. So one can be positive about the EU prospects to the US in terms of like trade deals. But when it comes to China's demand, possibly we need to see a lot more fiscal stimulus and a lot more help from the government before we talk about actual economic prosperity.
Shoaib Boutamin, Energy Advisor and CEO at Ranadril Energy in Algeria. Shoaib, your thoughts on where OPEC Plus may be going next? I mean, they must be quietly surprised that the oil price has continued at an upward climb, even though they keep announcing that they're increasing their production quotas. Is the sort of detail, the sort of proof in the detail that actually they're only raising quotas and not supply? Your thoughts on that intersection point: more OPEC quotas, less, not necessarily more supply, and so the price rising?
Yeah, good morning, Sean. I think this is the impact of the positive sentiment that the OPEC is resuming, is inwinding more barrels to the market, and by July we'll have more than 1.37 million barrels to the market. I think this is the sentiments that everybody was waiting, that OPEC is here and is winding more barrels to the market.
But is that actually barrels to the market, or is that simply quotas catching up with production supply that was already in the market?
Yeah, I think there is a strong demand at the market at the moment. There is a very strong demand, and especially in the United States. So allow me to go to United States if we speak about oil. United States, if we go to the commercial inventories, they really dropped by 7 million barrels in the last 2 weeks of May. So and this is something we have to highlight. If we go to SPR, Strategic Petroleum Reserves in the United States, they increased by 2.7 million barrels in the month of May. And this is a good indicator that there is a strong demand in oil in the United States. And this
it's certainly the season for it, isn't it? Everybody's getting in their car. It's summertime. It's typically a time to burn a lot of gasoline.
Exactly, and this is one of the main reasons, is driving season in the United States and many countries. And before we start now this live, I was talking to Narendra, and he said that New Delhi temperature was 44 degrees, and you know India is the biggest population in the world. And imagine the first question I asked, what about the electricity demand? And so what's the energy demand? How is it increasing really in India and China and United States at the moment? I think we have good pillars at the moment that we see a very positive demand on oil. That's why we see in parallel the OPEC Plus is increasing its quotas in the parallel oil prices, increase it to $67, and this is the highest level six since like 7 or 8 weeks. I think we are in a good situation at the moment that oil prices are really improving, and I strongly believe that we'll have. I'm very optimistic about oil prices this summer.
And with that OPEC strategy going forward, OPEC Plus, would you expect ultimately that the rest of the 2.2 million barrels of cuts that they're more or less more than halfway through will continue and all of it will come back?
Yeah, I think this is a huge opportunity for the OPEC plus this summer, because we have a good demand, a rising demand on oil, and I think the OPEC plus will stick to its strategy. But in August, I don't know if they will keep increasing 411,000 barrels per day or not. But with 1.37, I think at the moment by July, we'll have a good, let's say, positive impact of that on the global market. And I strongly believe that maybe we can touch the $70 by July or by August as a result of the high demand on oil.
Narendra, we're kind of in this, we're looking at these events happening, these meetings, the G7, and although it's as you say, G7 is a bit outdated, it's no longer representative of what it once was, but that's why they invite India and they invite all of the other actors in the world to attend. Saudi Arabia Crown Prince Mohammed bin Salman is going, and it's more G20 than G7 in reality, but it's still called the G7. Can it be a vehicle in which to calm down some of these greater tensions around trade? Because ultimately there doesn't seem to be much bilateral trade negotiations going on, even though we're close to the end of the 90-day suspension of the reciprocal tariffs that came on April 2nd and sent the world into a nosedive. That suspended period is coming to an end. And the only ones we seem to be having talks, at least publicly, is China, US. The rest of the world, at least we're not seeing or hearing about progress in their trade talks. Can the G7/G everybody be a platform where this thing gets sorted out in any way? Or is that too much expectation?
I think it's too much expectation. If you look at the different leaders who are going to participate in G7 in Canada, I think probably the focus is more on bilaterals that are being set up. For instance, between Indian Prime Minister and the US President, Indian Prime Minister, and the new Canadian, a Prime Minister, India's head of the, India's Prime Minister with the Chinese leadership and so on and so forth. I think, G7, because G20 has become more powerful now and actually a far more relevant and important organization because it represents 80% of the world economy. G7 doesn't. I mean, look at the G7. If we look upon G7 more like a kind of Western construct, and even if you look at the ground reality in the West, is fragmented. Europe is drifting away, and the US has kind of got its own direction. We don't know where exactly it's going.
But ultimately, it's a chance to meet. I mean, whatever it's called it chip and chips. It's just a chance for the world's leaders to meet, and with that meeting, resolve some of these fairly big issues that were announced to the world in April and have kind of gone silent, but yet are still there. I mean, that's the period of suspension ends in a few weeks.
I appreciate your optimism, but the point is, what is G7 agenda? What do they want to achieve? Have they shared that with the world? We have seen, of course, the agenda, but that's actually, if you look at very carefully, I mean, it's probably the more meat is going to come out of bilaterals and not, through that multilateral meat. That is the point, because where exactly...
So can the Indian bilateral with America, with Trump and Modi, resolve the outstanding trade position that India has, that the US is demanding more access? I think India has signaled they might give American goods zero tariff.
Well, it's going to be very high on the agenda for sure. It's very difficult to negotiate with President Trump, even if you perceive yourself as being a close friend of President Trump. We all know by now that even, that is very, very difficult. We just saw the Elon Musk episode. But the point here is that, the question is, when you look at the fundamentals are the world as we have seen since the collapse of the Soviet Union now, and the America leading the world, that era is gone. And the new world is emerging. And in the new world, it's not going to happen tomorrow morning. It may take 15, 20 years. But in the new world order, the poles are going to be Washington, D.C., Brussels, Moscow, Beijing, and New Delhi. That's the reality. So along the way, we are going to see a lot of disruption, a lot of summit, a lot of new
What
construction.
about Dublin? Dublin's not going to be on the list.
Ah.
Jesus, I mean, come on.
Dublin will have to go via Brussels. So Brussels is going to be very, very important. Europe is going to emerge as the second most powerful entity. I think probably bigger than China. The way things in 5 years, United Europe will be more powerful than China, which is a good news as far as India is concerned. Is good. A militarily powerful Europe, economically more autonomous Europe is good news for the world. Certainly very good news for India. So that's how we are looking at it. So along the way, the next 15, 20 years, you will see the emergence of several new constructs like G7. G20 is already there, but you will see more like, in the Asia Pacific part of the world, you might see in Africa, you might see Europe together with Latin America and so on and so forth. So this circus will go on, but the reality
And this will be the turbulence. This turbulence reflects.
Massive disruption.
And it's going to continue.
Massive turbulence. And that will also reflect in oil prices. Have you noticed one thing since President Trump visited Saudi Arabia and the United and Qatar and all the Gulf region, oil prices have seen new kind of direction. I see something has happened that suddenly we see that America and the Gulf, oil powers, they're more or less talking the same way. They're more or less behaving the same way. You see the influence of that on OPEC and so on and so forth. It seems some kind of, matrix has been worked out, quietly between the United States and the GCC country. I have no evidence, but to us, who are the second largest importer of oil in the world, that seems to be the case.
Well, certainly up till that meeting, prices were in a downward trend. And now since that meeting, they've been an upward trend. The whys of it is you could assemble different reasons, I suppose. Malia, what we're still seeing, however, in this sort of Q2 stress box, this started with the infamous liberation tariffs announced as they like to brand everything in America on the 2nd of April, took the world into a downward spiral. And that was suspended mainly due to the fact that the US Treasury bond markets were having a heart attack and everything had to be put on pause. And maybe Trump was going to do that anyway, but ultimately the bond market showed some very serious stress. That stress is still there. We're still getting signals with the ongoing budget bill passing through the Congress. There is still this moment of turbulence, Trump-influenced turbulence from the tariff wars is still putting a lot of stress into the bond markets. Your thoughts on those intersecting points and what we should be reading from them now in mid-June, sort of over 2 months later?
Sean, you're absolutely correct. There's a massive phenomenal shift happening in global bond markets, not the US market. Now, all these talks about DOGE cuts and cutting back, right now the US CBO has just announced how the new budget, the big beautiful bill, is going to add probably close to $2.5 trillion to even $10 trillion over the next 10 years, sorry, $4 trillion over the next 10 years. So the issue is the US is not cutting the spending back. They need to spend more. All the tariff benefits and the cuts will be more back end loaded, and bond market's not happy. But look at the Japanese bond markets, look at the European bond markets. This is happening across the board. Developed markets are not cutting back spending. Fiscal deficits are a huge problem. We could be on the precipice of a global sovereign default crisis at some point, because when is it going to go on? We right now are trading at 6% of budget deficit GDP. So the market may be getting excited right now, but right now, look what's happening in gold and silver and platinum. Commodity markets are screaming that something is not right. So we know how the equities are sort of the last lagging of the indicators in the market, but the FX market and bond markets are way more important. And you are right, this is a huge concern. And if the bond market is going to go above 5% in the 30-year, which I'm sure the US Treasury is trying to contain it, or 4.5% in the 10-year, that's going to be a big problem for US domestic consumption. And no one's even talking about that right now. So the question is, how is the US government or European government, how are they going to manage the deficits? They have this hope of AI and productivity going to be taking over and offsetting the debt, but that's a 2-year story. In the near term, we have a massive fiscal issue. And I think that's something that people need to keep a very close eye on, because that could be a big sort of headwind for bond and equity markets. And we could be range bound. So we're not really that convinced that this is anything other than a very choppy market, because we still have a lot of issues to work through. And yet the bond markets are a big warning signal to us.
Just to follow up on that, I mean, bonds, the 30-year, which are going on sale this week. There is a 30-year Treasury sale this week. If they go above 5, what does that signal? Why is that a red light flashing?
Well, it's going to be a big problem for the housing market. We're only seeing some numbers of weakening the pricing inventory, domestic consumption, remortgaging. Everything is sort of bent on those high-end rates. Rates need to be low for the U.S. economy to do well. They cannot handle a very high in terms of restructured financing. Anything you need to is depending on that back-end yield. And Treasury Secretary Bessent knows that all too well. And what are they doing? They're secretly adding liquidity in the back end of the bond market to support it. So the question is, all that's creating more QE, more money, more debt. There are no solutions. They're just sort of projections. And right now, the bond market, the bond vigilantes, as Yardini very nicely calls them, they are not very happy. And I think that's the next trigger from the markets will come from the bond market, not from the equity market.
Like it did 2 months ago. Shoaib,
Absolutely.
looking at the sort of the point you made there about it's a great time for OPEC Plus to be raising supplies, certainly raising quotas, it seems to me. Most research indicates that the actual net increase in supply so far in the second quarter with these first set of increases hasn't been resulting in tangible supply increase. It's more quotas catching up with supply. I mean, I'm just getting that point there because if this is a good time and that OPEC Plus are making market management decisions here, a lot of the reporting is that this is about punishing countries that have been misbehaving on their quotas. I mean, which is it?
Yeah, I think the message was addressed directly, I think, to Kazakhstan and Iraq because they were not really complying with the quotas really agreed about. But I think that
Well, maybe Iraq and Kazakhstan were right. The market wanted more oil, so we're giving it to them. I mean, oil prices knocking on the door of 70 would seem to indicate that more oil is what the market wants.
Yeah, I think that's what I said. It's the positive sentiment. If we do it as a group, that will have more positive impact. But when you do it individually, when you increase individually, that will impact really the market, and that's like it gives like a negative sentiment. There is that there is no compliance among the group. So this is the difference. So now, I think this is what the OPEC Plus at the moment is trying to do is to recover its market share, and it's ended up with the prices, with stability of prices at the last month, but at the moment, I think they are working to recover the 5.8 million barrels per day, and they have already started in April. And I think there is a program to wind more barrels in the upcoming months to reach 2.2 million barrels, I think, by November, if the plan is maintained. So
what about all the other cuts? Do you think they will also come into an accelerated return?
I don't think it's very easy in the autumn season because we'll have less demand in Q3, and I believe the time now to increase supplies is only summer. But I think we need to wait and see what will happen, and the negotiations between China, the outcomes of China and United States, because to be honest, that decision will really impact the global demand on oil. Because if we go back to see some numbers, data coming from China imports of crude oil decreased to 4 months levels last May. And it's an indicator that the tariffs are really impacting negatively in the global market and the global oil demand in China. So I think the trade, let's say the trade war between the United States and China and United States and the rest of the world, it has a very, very big impact on the global oil demand. And I think what's really happening now, negotiations within China and between China and United States in London, it gave a positive impact indicator that will have good impact on the oil market and that thing, oil demand, I mean, and I think they will have more surprises to see in the upcoming weeks.
Let's go to the survey question, which is looking at some of these earlier points. What will have a bigger bearing on direction of oil prices? The G7 summit, which starts at the end of this week, at the weekend. US-China talks, which are going into a second day today, which has been reported like it's some kind of achievement. I presume they were planning to meet for 2 days. I don't know, but nobody walked out. I suppose that's an achievement. The Iran-US talks, which of course are ongoing and certainly reporting every day is, oh, Israel's waiting on the sidelines to bomb on the Iran if they don't go well. The sort of big stick threat is there. Or all about the same bearing on the direction of oil prices? Which of these do you think has the bigger bearing on the direction of oil prices? Narendra, looking at India's particular economic well-being, again, has been the fastest growing big economy in the world in recent years. It sort of stumbled a little bit from its elevated position. It sort of had a little bit of a more sober year. How is it looking now? You're obviously coming into a new fiscal year. In a new fiscal year, what is the outlook for that?
Well, if you look at the data, the latest data of, let's say, the last quarter, there's January to March, and the GDP numbers was 7.4% growth. 7.4. I mean, it surprised many of us, including me. But that's the number. And I think if you look at the economic landscape today, and also, major players like the corporates and demand and different states, because we are a federal structure, exports and imports and everything, if you put everything into the basket, I think we're probably going to be, this calendar year, we are going to be in the region of maybe about 6.4%. So for an economy of our size, which is $4.2 trillion on nominal basis and $14 trillion on PPP basis, 6.4, 6.5 is very impressive number. And I see absolutely no reason that we'll not be able to achieve it, because the monsoon indications are very good. And monsoon has already covered parts of India, the southern part, for instance. And the forecast is monsoon is going to be very, very good. And good monsoon is always means good GDP number. So, and the economic sentiments are very good. And of course, for one couple of weeks, we had a bit of turbulence in terms of, tiff with Pakistan, but that's all over. It's all forgotten as far as economic India is concerned. Things are almost back to normal. So overall sentiments very good. And that's why we don't want to see any turbulence in terms of America and China trade relationship, because that's not good for us. And we just hope that, President Trump might be firing all the time, but that's more politics, more aimed at his, domestic voters than actually the international order. But he's unpredictable, that we know it, everybody knows it by now. But that said, at the same time, we think that even, for instance, things go a bit wrong, global economy by and large should be able to sustain the next 1,000 days or so, whatever number it is. And probably there will not be any fundamental damage to the global economy. So one has to really look at it and think in a most positive way, engage with President Trump to the extent possible. At the same time, a respective country like India, China, Russia, European Union, Japan, we all need to make sure that the world remains on the track, as particularly when it comes to economy. But the last line I want to add here is that as far as oil prices are concerned, the way landscape is emerging and the thaw we have seen between the GCC and the Saudi Arabia and the United States, and at the same time, whatever is happening between China and the United, we think the oil prices probably are going to be in the region of maybe $62 per barrel to $70 per barrel, at least for the next 2-3 months. Very difficult to predict long term, but it looks like that's the kind of thing which is going to be acceptable to the large importers as well as to the large exporter. And even $70 per barrel Brent is not a bad news as far as India is concerned.
Malia, looking at some of the other factors we mentioned earlier and where they play into the markets, you mentioned weak dollar and to a great extent weak energy prices are well appreciated across the world at this turbulent time, but we do have elevated prices. Inflation continues to look to be relatively bedded in, locked in the US. Rates not looking to come down anytime soon. Gold hitting records every day. Same with Bitcoin. Where do you think the sort of the monetary policy goes now into the second half of the year? Is it a facilitator of the like a lower oil price? Are we going to see a weaker rates? Where do you think the Fed go with this picture they're facing?
Well, I know where President Trump would like to see rates to go, but Fed Powell is pretty happy with rates as it is. I mean, the dual mandate of labor market employment, the labor market is quite robust in the United States right now. It's been very resilient despite all the layoffs we've seen in the private sector. So Fed Powell is very happy with that, right? We have unemployment of 4.2%. Non-farm payrolls came out pretty much better than expected. There is no issue there. Having said that, then you have the inflation side. The inflation is coming a little bit higher than the 2% target. It's slightly lower, but it's still not at target. So they don't have any reason to change. Rates are high. We know that US needs lower rates, but the US Fed cannot cut rates. If they do, the bond market will be lost. It'll be collapsed. So as far as right now, the June FOMC meeting, there's no expectations of a change. There's a lot of pressure on the Fed to cut rates, but I think they're just going to steady and keep going and be data dependent because there is no need. Markets at all-time highs. We've gone past the worst of the Trump tariffs. Data is holding in quite okay. They are being paid to wait. I think they're keeping a very close eye on the bond markets as well because they know that when they cut 150 basis points last fall, that's when the global bond market, that's when the US bond market went down. So they made a mistake and they cut too soon last year when there was no need to. They were too looking the rearview mirror. So we don't think they made that mistake again. And if anything, they'll just stay on hold.
Let's have a last word from Shoaib on where things are locally in North Africa, in Algeria, Libya next door. What is the outlook for, speaking of these rising production quotas from the 8 countries within OPEC Plus that are bringing back the 2.2? What is the ability of the likes of Algeria and Libya to add more production, add more supply?
Yeah, I think Algeria has some quotas to respect to resume to unwind its quotas to the OPEC Plus, and I think it will start really to unwind some quotas. But I think in Algeria at the moment we concentrate also on natural gas, and we look an open a natural gas market in Europe. So as we know. Now the inventories of natural gas in Europe are only 50% compared to 74 last same year, 24. So I think this is another issue for Europeans at the moment, how to refill inventories of natural gas by 90% starting of November. And we know that the transit natural gas.
You need to hurry up.
Yeah, exactly. So there is the transit natural gas from Russia to European Union through Ukraine is over. So from last December. So now Europeans are in a rush to fill up, but with LNG. And if they cannot do that, certainly they will go to another alternative, which is oil, and that's why maybe we see more oil demand in European market in the upcoming winter.
Is there any capacity for Algeria to sort of meet that extra demand, both on gas or oil, even if it's there? Is there capacity for Algeria, Libya to increase and send more across the Med?
Yeah, I think if we talk about Algeria has to respect its commitment because it's member of the OPEC Plus and the Group of 8, so it has to respect its quotas. But yes, Algeria is investing more than $50 billion in the upcoming few years. And most of the investments is going to natural gas, and part of it, of course, for oil. And this will position Algeria as a leading country in North Africa and the region, supplying steady supplies of oil and natural gas. Same for Libya, and I think the region will play a crucial role to supply steady supplies of oil and gas to the European market, and at least to lessen the impact of winning off the Russian oil and natural gas supplies.
Well, that's not happening anytime soon. Let's see where the market is. What will have a bigger bearing on direction of oil prices? US-China talks getting the bulk of the view of this room. G7 summit. What's that? Says Narendra, and this room seems to agree with him. Not too relevant. Iran-US talks always going to be a bearing, but not overwhelmingly so. Let's post that online and see where the rest of the world agrees with this room. Shoaib Woodameen, thank you so much for joining us.
Thank
from
you.
That beautiful virtual backdrop you have, and Narendra Taneja in India and Malia Bengali in the UK and London. Thank you guys. Have a great week.
Thank you.
And look forward to seeing you all soon again. All the best.
Thank you, Sean. Bye-bye.
Bye-bye. Thank you.